Boom, we're recording now. Everyone thank Asia because I would have kept talking and recorded once we got to my picks. In that case, I'm also going to stream this to YouTube. 1 second. And alrighty, it is going to YouTube. So cool. So the people on YouTube will be able to see this live again. If they couldn't make it, they can actually watch it live if they're on YouTube and not inside of the session. All right. I just wanted to touch on this real quick. I just wanted to say thank you for everybody that's been coming to these sessions. You can see we have a 4.8 on Meetup out of 5 stars, which I think is kind of crazy. We got 121 5 stars, and then we have under 10 for each one of these. I don't know how we got any 1 stars. We got 3. How, I don't know. Maybe someone just couldn't get in and just gave us a bad rating. But the thing that I wanted to say is that we have hosted over 301 sessions, and we have about 136, or this one says 138, so maybe 2 haven't come in, but we have over 138 rated. So I just want to say thank you for everyone that rates us. This actually helps the algorithm on Meetup. It pushes us to the top. It makes us one of the top shown groups when it comes to stocks, and then it brings more traders, more investors, new and experienced, into our session. So I just wanted to say that really quick. Really appreciate it. Keep it up. If you're at Meetup and if the session ends, just go ahead and give us a rating. No pressure. You don't have to give us a 5 if you don't feel it like it was a 5, but we just appreciate any ratings that you leave behind, any comments. So just want to tell you all thank you. All right. Now, charts. All righty. So if this is your first time looking at one of my charts, I know it may look a little confusing, but before we do this, let's just check the news. So what I like to do before I chart a stock or before I even chart the market is figure out what type of news can sway the market for my trades. So with TradingView, what we can do is go home, go to products, calendars, and we want to see the economic calendar. The economic calendar is going to tell us what type of reports that we can expect this week, and these reports sway the market. If you've already been trading for a while, you know how important this is. The worst thing that you can do is look at a setup. Let's say you're trading Apple. You jump into Apple and then Apple crashes on you because you didn't know that some job report, or you didn't know that the chairman of the Fed was going to speak that day, and it just wrecks your trade. So I always like to do this on Sundays. Just take a glance at the economic calendar to see what major events we have so I can stay clear of them. And it looks like we have a few this week. So what I like to do as well to get rid of all of this, because all of this is not important. There's a whole bunch of stuff that don't really mean anything. You can turn on the only high importance toggle, and then you can look at the different things. So Monday, we should have a clean day. If there's no major report, so whatever we're looking at, we should be trading off momentum. I know that this week is CES, which is big for tech stocks. It's going to be big for NVIDIA, big for AI. So watch those AI plays. I'm going to talk about a few of those AI plays going into this week, because we traded a few of them last week, and we made some real nice returns. And we're actually, are we in a few? I think we're in a few. I need to go check again. But Tuesday, we do have a PMI, a service PMI report that's coming out. I don't think that's going to be too detrimental to the market, but I do think this job openings, anything that's related to jobs or inflation, you always want to watch out for. So this job openings, this comes out at 10 o'clock Eastern Standard. If you're in any options, for my option people, you want to watch out for this job openings, because again, if you're in any option trades that have time decay and all the other good metrics working, you may want to steer clear of this. So this prints at 10 o'clock. The market opens at 9:30. You got about 30 minutes to get out the way or stay in the trade and figure out what you want to do. Wednesday, this is the one to circle on the calendar. This is the big one, FOMC minutes. So what is FOMC minutes? So this is when the Federal Reserve released minutes from their meeting. And what I mean by minutes, they're just releasing the notes, any updated notes from the meetings that they just had. And if you weren't in the market, the last time they had this meeting, it crashed. I won't say crashed, but it bruised the market really bad. Like, it was a blood red day right after Jerome Powell You're going to hear me talk about his name a lot if you're new here. He's the Fed chairman. So after he spoke, the market tanked because basically what he said is that, yeah, we have some interest rate cuts on the table, but we have a few, like 2 less than we thought we would have. So if we were going into 2025 saying that we were going to get a total of 4 rate cuts, Jerome Powell is saying, hey, we're only going to get 2, which we kind of expected 4. So that's why I said this is going to be real important on Wednesday, because maybe we can get some hope here that we can get an update on that. If not, watch out. There may be a pullback in the market, which, I mean, honestly, if you're buying low, selling high, this could be another opportunity to buy the dip and take whatever stock you're trading back to the upside. So again, January 8th at 2 p.m. Eastern Standard, FOMC minutes. If you've never experienced it, just watch the market around this time and you'll see what I mean. Thursday, the market is closed for President, I think it's in regards to President Carter's funeral, I want to say. I live here in Georgia, so I'm pretty sure they're going to have something here in Georgia. President Carter was from Georgia, so the market is going to be closed Thursday, and then Friday it opens back up, and we have unemployment rate. So non-farm payrolls, unemployment rate. Again, anything that's related to inflation or jobs, you want to watch out for. So Friday and Wednesday are the days to kind of be on your toes if you're looking for trades. And then again, if you're in the Discord, I'm going to kind of help us navigate around where to be, when, and how. So yeah, any questions? Let me check the chat. Yep. Jensen is going to be talking at CES special session. Yep. NVIDIA CEO is going to be talking at the session, so we can watch NVIDIA for a move. I'm going to be watching the cheaper AI stocks because I think that cheaper stocks are going to move, are going to give you a bigger % return this year than the bigger stocks in the AI space. And they've already started. All right, cool. Let's go back to a chart. All right, let's start with Meta. I had Rocket Lab up, but we'll chart Meta. Normally, again, if you've been in these sessions, I start, and I'm going to clean my chart up for you all. I start with the SPY. This year, I said that I'm going to start with different stocks every time. We chart the SPY every single time. I know some people get tired of it, but let's start from the top. So what I like to do is start on the day. So when I'm looking at my stocks, I like to make sure my indicators are in order. I stack them this way on purpose because they all are important, and I have them stacked in levels of importance. So the first thing that I have at the top of my chart is my RSI, and let's focus on this. So the RSI stands for the Relative Strength Index indicator. This is simply telling you if a stock is overbought or underbought. The reason why this is important is because if a stock is overbought and it's too hot on the RSI, there's a high chance that it's going to pull back. You can see that every time it gets around 70, it pulls back. 70, pull back. Above 70, pull back. 70, pull back. So what I like to do, I like to get in between 45 and 55 pointing up. So Meta on the day chart is at 53 pointing up. That's a thumbs up for me. And the reason why I have the RSI at the top of my chart is because if my RSI is out of whack, I'm not trading that stock. That's just how I trade. Again, let me take that back. If I'm swing trading, my RSI is out of whack, I'm not touching the stock. Now, if I'm option trading, which I can make money if it goes up or down, that's a different conversation. But with swing trading, RSI 45 to 55 pointing up. And what you want to do, if you enter in between 45 and 55 pointing up, you want to take it up to about 65, 70. If you're still holding it and it gets up to 70 and you got in between 45 and 55, you should be in profit. You can take profit, wait for a cool off, and then just rinse and repeat, get back in. Now, if the RSI is all the way down here at 30, that's a good opportunity to go long. And what I mean by going long is if you're looking for a stock and you want to hold it for 3 months, for 6 months, for 9 months, 12 months, however long you want to hold it. If you want to hold it for a while, it's good to buy these low RSI for those reasons. But if you're looking for a stock to just buy today, let's say you buy it on Monday and you want to sell it on next Wednesday, a 30 RSI may not be the best for you, because what a 30 RSI is telling you is that the stock is underbought, meaning that a lot of traders and investors don't find it attractive on that time frame for that time period. So a lot of people didn't want the SPY. I'm sorry, I said SPY. That's how you know I've been charting it too much. A lot of people didn't want Meta when it was down here. So if you would have bought Meta with the intentions of going long and taking it from 30 all the way up to 70, a lot of money could have been made, but you would have to set your mental expectations on, okay, I'm buying this here, but I'm waiting until it gets up to 65 or 70. I'm not going to jump the gun. A lot of people buy low RSIs and they're like, well, it's taking forever to move. Well, I mean, it's a low RSI. Again, that means that it is underbought. People have been selling it off. No one wants it for that time period. So again, if you're looking for a trade that has some momentum, you just want to get in and get out within a week, 2 weeks. I like 45 to 55 on the RSI point and go. Any questions? And I'll take silence as a thumbs up from the group. So we got silence. That means we're good. Cool. Let's keep it rocking. All right. Body of the chart. All right. So we're looking at the day chart. What this simply means is that everything on this chart is in regards to one day. So all of these candles represent one day, right? This is the day chart. You got the week chart. You got the 4-hour chart. So since we're on the 1-day chart, each and every single one of these candles, let me zoom in. Each and every single one of these candles represents the price going up or down for 1 day. Green, up for the day, red, down for the day. The easiest thing to remember is just how these candles build, because later on we may start talking about how to use a strat, which is the strategy where you're counting candles and you compare size of candles and entries and openings and all this other good stuff. But that will be for later on this year. But again, if it's green, that means it starts the day here. So at 9:30 a.m. when the bell rings, it starts here. And then it goes up. And at the end of the day at 4 o'clock, it closes here. When you go into red candle, it is the opposite. It starts the day 9:30 a.m. It starts here. At the end of the day, it closes here. Easiest thing to remember about candles. That's all you need to know for swing trader. All this other stuff, depending on the strategy, you may want to go in and use some other things. All right, let's keep it moving. Next thing. So let me hide my moving averages for right now. They're kind of confusing. Next thing, you want to become good at spotting support and resistance. Support and resistance is going to help you figure out where the stock can go and where you can make money. I like to buy on support and sell on resistance. So what is support and resistance? Support is just the floor. It is the floor for the current stock price. So we're looking for a floor for Meta. Put one right there, right? And so why would that be a floor? So when you're placing these lines, support or resistant lines, you just want to place it to where the stock has hit that price and rejected 3 or more times. So we're looking right here in this area alone. We can see that the stock came down, boom, it hit it on that red candle, rejected 2 green candles, came back down again on 2 green candles, boom, bounced or tried to break on the red candle, bounced off on a strong green candle, and then it kind of basically broke even. Didn't move too much up or down that day, but broke even here on this candle right here. So that's already 2 touches. You go back to this side, you can see it went green and then it sold off red. So it crosses this price point and then sells off. You can go back here, it goes up green on this green candle and then immediately sells off, so on and so forth. It came from all the way down here and just started to chop right on top of that price point before breaking lower. So that's how you know you have a good support. And there's multiple levels of support. You can put a support right here. You can put a support up here. Again, 3 or more touches gives you that support. Now, when you're looking for resistance, you want 3 or more touches as well. So if you're looking for resistance, what you could do is go here, or you can pull it up here, right? So you can put it right there. And if you wanted to, this is not perfect, but you put it right at the top of this candle. There we go. So about 625. So once you have a zone like this identified, then you can find your trading range, right? So it looks like Meta was on a crazy run. Boom, it hit this 625. Again, it just started to test around that 625 price point before it finally gave up and came back down to support. So again, now we have it trapped. We have a zone for it. We have a floor and we have a ceiling. And with swing trading, what you want to do is buy low sell high. So you want to check your RSI first. If your RSI is favorable, thumbs up, cool. And then you want to see where is it regards to the floor. Is it just bouncing off the floor, or is it up against the ceiling? If it's up against the ceiling, you may want to watch out because it can pull back on you. And the worst thing that can happen when you trade is you buy into a stock and then it pulls back right off the ceiling, right? So getting a bounce off the floor is what you want. Also, this is making a pattern. Mark will talk about patterns later. This is making a double bottom, which is just a W-shaped pattern. And the double bottom ends where it started. So it started here at 624, came down, went up in the middle, came down, and is going back up. So if it breaks above 607, 608, we can see Meta going right back up to 625, possibly 630, forming this W-shaped pattern, which is called a double bottom. And again, it's easy to figure out how you want to do it once you set your support and resistance. I'm at the point now to where I can kind of eyeball this, but from time to time, depending on the stock that I'm looking at, some charts you're going to look at and it's going to be a crazy chart. But again, once you set these lines, this gives you a realistic expectation of where I need to get in, where I need to get out. No stock is going to go from, this is what, 605 to 700 in one day, but it's also not going to drop from 605 to 300 in one day, right? Because it has these different bounce points. You can also put one here. Let's say if it broke through this, let's say tomorrow is January 6th. I don't know. Something crazy happens because it's the anniversary of January 6th or whatever. Something in the news just pops off, right? And then it goes back down to this level at 583, 584, and it breaks. If it breaks, we can put a level right there. So now we have a pocket below and we have an area above. So if it breaks this support here, which I don't think nothing's going to happen tomorrow, but if it breaks, then it can fall into this zone. And you can see that it was in the zone for a while, right? So if it falls back down into the zone, we can do the dance between 560 and 585 or 561. Again, it's not perfect, but I'm calling that 560. So 560 to about 585, it could be bouncing around. But right now, again, according to our RSI, is moving up, is in a good place, and this is what we want to see when looking at the candles and setting our support and resistance. Any questions? Let me check the chat. All right, no questions. Perfect. All right, let's keep it moving. So MA ribbon. All right, here goes the squigglies. All right, so the MA ribbon just stands for moving average ribbon. So the moving average ribbon is something that I like to use. You need moving averages because you want to know the average stock price over any given period of time. That is important because the averages will help you to identify where the stock should be. Is the stock in a good place? Is the stock in a bad place according to its averages? If the stock is averaging down, that's not good. If the stock is averaging up, of course, that's good. But how would you know if you didn't have the moving average ribbon or moving averages as a whole? I like the moving average ribbon because it allows me to have up to 4 moving averages. I know a lot of people like to use 2. I started off, when I first started trading, I only used 2. I used the 50 and the 200. I'm going to tell you right now, don't do it. The 50 and the 200 is way too slow. If you're like a super, patient trader, the 50 and the 200, go ahead. I would recommend, if you only want to start off with 2, use the 20 and the 50. The 20 and the 50, the way that these work is that if you don't have that many days, again, added into your lines, they're going to intertwine more often than a 50 and the 200. And so what I mean by that is that, again, if we're looking at a 20 moving average, 20 SMA just stands for simple moving average. If we're looking at a 20, this stands for 20, we're on the day chart, 20-day moving average. So the average price over the last 20 days is being tracked by this yellow line. This yellow line right here that's coursing through all of this. This is your 20-day moving average. The other line, this orange line, is your 50-day moving average. What you want to see with your moving averages is that you want your lower moving average above your higher moving average. So you want the 20 above the 50. If you're using the 50 and the 200, you want your 50 above your 200. If you're using all 4, which I recommend because it's easier, honestly. And I know you're like, LJ, how is it easier using all four? The reason why it's easier using all four is because if you can get all four stacked in chronological order, and what I mean is if you can get all four from least to greatest, 20, 50, 100, 200, if you can get them stacked in this order, the only line you have to pay attention to is the 20, the gold line. That's the only one you have to pay attention to. And what I mean by that, let me give you a good run of, let me back out actually. Give you a good run of the chart. So for instance, in this area here, when you have them stacked, and the reason why I'm picking this side of the chart is because they were in a bull trend for a long time. So when you have them stacked up like this, that means that they're in a bull trend. And again, all of these averages are going up. So when you have 20, 50, 100, 200, all in this order, the reason why I say you only have to focus on the 20 is because it's not touching the other moving averages, right? You can see that the candles came down, boom, hit the 20, bounced off, hit the 20, bounced off, ran up, broke below the 20, shot all the way up, right? So you can just play off the 20. So if you have a down day or a down week and you're looking at a stock and it's resting on its 20 MA, you still want to check your other indicators. But if it's resting on its 20 MA, you check all the other moving averages. They're in chronological order. You can go ahead and start to prepare to enter your trade. More times than not, I'm not going to say there's 100% probability on this. Nothing is 100% in the market. I don't care what it is, what indicator. If someone tells you that it's 100%, they're lying and they haven't been traded for a while. But you want to trade with high probability, then again, finding these moving averages stacked, bouncing off that 20 will give you good places to enter and good places to exit. Now, you're not going to always get that, right? But that's one of the goals of finding these stocks, is to find stocks that has a really easy chart. Don't trade them. In 2025, do not trade the hard charts. If you look at a chart, I don't care if it's a cool company. I don't care if the company has life-saving technology that can make us live to 150. Look at the chart. If the chart is too complex, go to another stock. There's thousands, I think like 3,000-4,000 stocks, maybe more on the US market. Find another chart. There's profits everywhere, every day, even on down days. The whole market could be down. In some corner, something is up. So again, find easy charts like this to go ahead, make your plays, and keep it moving. So again, you want the moving averages to be stacked. If 4 is too many, go down to 2. 20 and 50 is my recommendation. Any questions? All right, Asia gave us another thumbs up. All right, Asia, you're the spokesperson for the group. All right. Next thing, VRVP. All right. I don't know if you've seen this one for my more experienced traders. I don't know if you've seen this one before, unless you've been in one of these sessions or unless you went to one of our crypto sessions. But this tool right here is a cheat code. The reason why it's a cheat code is because it literally tells you where the buys and sells are. So the VRVP, let me open my data window, stands for visible range volume profile. The way that you want to use this is that if these bars in yellow and blue are sticking out to the left, it's going to be harder for the stock to get past it. And these could be possible bounce points, right? So what we can do is look at all of this chop. And then we look over to the left. You look over to the left, there's a lot of volume right there, right? And then you look in areas, we got a gap right here where there's really no candles right here. And we got, a few candles. You go over to the right, guess what? It's a gap in volume. And then we come back to areas of massive chop. Guess what? Whole bunch of volume right there, right? And again, the VRVP, it stands for visible range volume profile. So that means it's giving you the volume profile for whatever is visible on your chart. If you can get this one down, it is a cheat code because it adjusts to your chart, which regardless of which time frame you're using. So if you're day trading and you're using a 1 minute, 15 minute, 5 minute, whatever, this tool is going to adjust. You don't have to tweak it. You don't have to do anything else. We actually had someone, what was it, a week ago, 2 weeks ago? They said that they were like, hey, this actually, they said this actually works because it finally clicked to them how to use it. And so what does the blue and the yellow tell you? So when you're hovering over these different levels, these levels are called nodes. These rectangles are called nodes. When you hover over them, if you look in this data window, you can see the data and the information changing. So if I hover over this node here with my mouse, down there you see up is at 3.46. Again, in this area is at 3.46. Down is at 3.0. So what does that mean? That means at this level, right here where the stock is at, we have up volume. We have 3.46 million of up volume. So that's buys. We got 3.4 or 3.5 million buys versus 3 million sales. So the stock is going to want to go up where there's more buys because people are buying. That's why I say this, if you can get used to using this, is a cheat code. It's just telling you where more of the buys are versus more of the sales. So if you're looking at a level to where it's more sales than it is buys, stock is probably going to want to go down because there are more people selling at that price point than buying. And then let me show you the visible side. So what this tool is doing is taking into account all of the candles from over here to the left, all the way to the right. So if I scrunch it up, give it a second, it's thinking, boom, it adjusts. You don't have to tweak it. You don't have to do anything. It adjusts and it tells you, again, where the volume is at. So look, where we got all of this chop, where all of these candles are, what do you notice? A lot of volume. To where we don't have pretty much anything, look, light volume. No buys and sells there. It's some buys and sells there for sure, but it's not that many. Most of them are right here in this area, right? And then you got a lot right here. And if you look over to the left, a lot of chop. So if you want to zoom in, you wait, boom, it adjusts and it tells you, again, where all of this chop is at, lot of volume, right? So again, easy tool to use. And if you can get really good at it, when you go to day trade, it works wonders. Last week, I did some day trades for the open of the market, killed it. 3 day trades back to back within, I think I was day trading for like 3 hours live. Made 95% on the first day trade, made 142% on the second one, and then made over 200% on the third one. And I can show you that. Matter of fact, can I show you? Let me see. Mark, do we have? Yeah, I can show you. I'm gonna stop sharing for 1 second and share the Discord. Where are we at? Options, boom, there we go. And we'll go right back to the chart. But I just want to show you how easy, again, little complex if it's your first time looking at it, but if you can get it down, it is a hack. Here we go. Discord. All right. This is our options chat, our options channel. And let me zoom up. Where are we at? All right. So I was trading puts on the SPY. I made 95% on my first trade. So 95% at $203. This was a day trade. It was 11 o'clock. My phone was dying. And then we had another one. Where are we at? Oh, I don't think I even have the 142 screenshot, but this was another one. This is at 132. I ended up getting out of this one at 142%. And then I went for one more and I got 212% right here. And you can see, where are they at? Right here, members of the Discord were telling me to get out of there, sell. But again, yep. If you can get it, you can do that. And I was able to look at the VRVP, look at my indicators, and pretty much predict where I need to get in and get out. So again, new indicator, a little complex because it pretty much do what you tells it. But if you can get it down, a lot of money, you can make a lot of money using it. All right, last two indicators. The MACD. So this stands for moving average convergence divergence. Don't worry about it. Crazy name, simple concept. The only thing you need to know is which color line is on top. Let me go back to that. Which color line is on top? So this indicator is telling you what's the trend of the stock on this time frame. So if someone says, hey, buy Meta, you need to know, is it in a buy trend or is it in a sell trend? And the way you can tell is by checking the MACD. So you look at the MACD. If this red line is on top, it is in a confirmed sell trend. The reason why is because this red line represents selling pressure. So if the red line is on top of the blue line, that means that selling pressure is being applied to the stock. Now, conversely, if the blue line is on top of the red line, that means that it is in a buy trend, because this blue line represents buying pressure. So red, selling pressure, blue, buying pressure. Whichever one is on top is the dominant trend. So if red is on top, sell trend. Blue is on top, buy trend. Now, if you're looking at these squiggly lines crossing back and forth and you can't really dial it in, check the histogram that's behind the chart. Anytime blue is dominant, you got green on the histogram. Anytime red is dominant, you have red on the histogram. A little trick with the histogram is that once it starts to fade its primary color, get ready for a move to the other side. So you can see we got dark green in this uptrend. That means we're in a strong buy trend. It's dark, strong uptrend with the green. And then it starts to fade a little bit. It gets weaker and weaker and weaker, and boom, it crosses over to that sell trend. And what you'll notice is that it coincides with the crossover from these pressures, right? So you got blue crossing red right here, increasing with intensity. Blue is on top, it's dominating. And then you see it curving up, it's getting weaker. Boom, it crosses. As soon as it crosses, we go down into a sell trend, and then you got a lot of red on the histogram, more dark red than that light red. But you start to get some light red, moving over, more light red, and then boom, cross back over to green. Same thing. So again, crazy name, but a really simple tool to help you understand what trend the stock is in. Because sometimes just looking at the candles and looking at the price of the stock, like Meta it pretty much broke even on the day. It was up $5 on the day, but it's still technically in a sell trend because of the MACD. Now, when the MACD crosses over, you get a pop. So this is for my option people and my day trade people. When the MACD crosses over, so when the trends change, when you go from a sell trend into a buy trend, so when this blue line starts to come up, and once it crosses this line, you're going to get a pop in that direction. And that happens on both sides. So back here, when you're in a downtrend, for my swing traders, when you're in a downtrend, you want this MACD to creep up, and you want these two lines to be close to connecting. You want them to almost be touching, like how you want two wires to touch, right? You want them to be really close to touching, because once the MACD crosses over, that next candle is going to be a candle that starts the uptrend. And normally that candle is a nice size candle. So you're going to get an exaggerated reaction to the upside to start the trend, and then the trend follows. And then you get the same thing on the downside. So when you got this crossing over, boom, it crosses over, it goes into the downtrend. The candle that's printed when this crossover happens is a nice downside candle. So again, you can play the trend for my swing traders. For my option traders, you want that pop, because option traders, you can make money whether the stock is going up or down. So if you want to play the pop here, boom, play it to the upside, get your money. You can run the trend if you have enough time on your option contracts. And then if you want to play puts, it crosses over, boom, you hit your put, you hit your stride, go ahead and take your profit. So that's how you use the MACD. Any questions? Let me check the chat. Ross says, Asia said that's a game changer. I appreciate that. Ross says the longer the bars in the VRVP, the stronger the support. That is correct. The more you're going to get a fight at that level. All right. Any questions on the MACD? RSI, MACD are lagging. Yep. That is correct. All right. Stochastics. Last thing. This is a secondary indicator. You don't really need it. You can use it if you want to. I like to use it because the stochastic, so this is a normal form of RSI. They have it short. So a stock RSI is just short for stochastic RSI. What this is telling you is how much rocket fuel you have in your rocket, right? If I plan for this rocket to go up, how much fuel do I have to get there? Like how much intensity and momentum and strength do I have to make it up to my resistance? So we're bouncing off the floor. Are we bouncing off the floor with weak momentum, or are we bouncing off the floor with some strength, right? So when you're looking at the stochastics, the way that you want to read this one is that you do have a zone, just like the normal RSI. This zone is slightly different. It bottoms out at 20, tops out at 80. The way that you want to read this one is that if you're looking to trade a stock up, you want the stochastics to be low. You don't want it too low at 0. I like being above 20. So when you want this just think about it as a coiled up spring that has some built up energy, right? You want this to be coiled down at the bottom for your play. So once you get in your play and your stochastic starts to rise and stretch out, again, this is showing you your momentum. So we have more momentum to the upside than we have to the downside because the momentum to the downside was already used. We just used it to the downside, and now we're recovering, going back to the upside. Now we're back above 20. This means that if let's say we get a MACD crossover, or let's say we're going to break through resistance, we got enough gas in this tank, right? We're only at 24. This goes all the way up to 100. I can scrunch it up. It goes all the way top side to 100, but you do have some points that you need to watch. So check points that you need to watch: 20, 50, 80, and then you have 100. It frequents 100. You can see it hits 100 a lot across the top. I can even put a line right there, and you can see how many times it hits 100, right? It likes to hit 0 as well. Scrunch it up. You can see how many times it hits 0. What you want to do is wait for it to hit 0. Again, if you want to play this up, wait till it hits 0, crosses 20 and stay. So across 20 is at 24. It looks like it's going to stay. All of my other indicators are looking good. And now my next checkpoint should be 50. We get to 50. Let me check my other indicators, see where we are. Everything else agrees. I'm willing to take this from 50 to 80. Once we get to 80, again, check my other indicators. Where are we? We're good. Take it up to 100. Once you get to 100, I recommend taking profit. If you've been holding this since 24 and you actually survive and make it up to 100, take profit. That means the momentum to the upside is going to be slow. Not saying that the stock can't go up anymore, but again, this is your momentum indicator. It means that, hey, all of the built up energy has been expended. At this top point, it's huffing and puffing, and eventually it's going to come down. You can see we hit 100. It's trying. Boom, went back down to 0. Hit 100, kind of hung around, 0. 100, 0. 100, 0. You get the point, right? So if you can survive between 80 and 100, again, and all your other indicators are looking good, go ahead and take profit. You may take profit even sooner if you're trimming. You could trim on your way up. You can trim at 50, trim at 80, and then completely get out of the trade at 100, depending on how you set it up. But that is the stochastics. Again, secondary indicator. You don't have to use it, but I like to use it because I trade options. I swing trade, I day trade, and I just need to know how much gas do I have in the tank for the move that I'm setting up. All right, that is the last indicator. So hopefully now for my new people, when you look at my screen, it's not so scary. It still may be a little scary if this is your first time looking at it, but you don't need all of these. You can pick whichever ones you like. I have all of these on my screen because I do a lot of different styles of trading, and I may not use each and every one of these depending on the technique that I'm using for when I'm trading. But I just like to have them there just in case I second guess myself. Like, okay, cool. RSI looks good. I'm bouncing off support, but are we in an uptrend? Do I have any energy to go to the upside? So I like to have all of these things there just in case I second guess myself. But do I have any questions about any of the indicators that we went over so far? All right, cool. I take silence as a thumbs up. All righty, so that is it for my portion. I'm going to go ahead and, yep, Asia gave the thumbs up. I'm going to go ahead and pass it over to Mark so he can take a look at you all's picks.
Appreciate it, Ladarius. Give me 1 second. I'll share my screen. This window. All right. So let's start with. And I'm going to start off on the weekly and then also chart out the daily for you. Screen's lagging a little bit. Okay, so Nvidia's current price is $139.50. So we've traded Nvidia in the past. You can see why I have so many support and resistance lines. So currently, we can see that Nvidia is testing a support that we had drawn at about 130, 140 would be the support that we drew. So if Nvidia can break above 140, then the next place that we could be seeing Nvidia get to is going to be this 150 range. And after that, if it breaks above that, because it's all-time highs, just treat each resistance or target price after that as $5 to $10 increments. So you can say the next place, if it breaks our resistance at 150, would be 160. Just looking at the chart, RSI level is a little high. It's sitting at 62. It does have room to go up, but just keep that in mind that the RSI level is a little bit high. It's outside of that sweet spot. Not saying that you shouldn't get into a trade or you can't find a good trade, but you just want to trade it a little bit cautiously because that RSI level is high. Now, when you pair that with the stochastic RSI, the stochastic RSI is showing us that it's pretty low, right? It's basically in that oversold region. It has a little, it can get back to zero. We know the stochastic RSI can get back to zero. It likes to get back to zero, but it is testing the 20 range. So if it rejects this, we could be seeing this try to get back to 50. With that, if you pair these two together, it's showing us right now that if the stochastic starts to point upwards, then that RSI at 62, it still has room to go up from there. That's what it's showing us. And I'm guessing that with that, if that does happen and we see that stochastic point upwards, we'll be seeing Nvidia try to get back to that 150 range and see what happens there. Now, as far as my support levels, again, this support is another strong support, 130. We can see that it's the stock price is testing the moving average, the 20-week moving average, and anytime stock price tests the moving average, you always treat that moving average as either support or resistance, depending on where the stock price is at, where that candlestick is at. So because the candlestick is above the moving average, we would like to treat this 20-day moving average, a 20-week moving average, excuse me, as our support level. So we're saying that, okay, if this stock price drops, we know that it's going to come and try to test this 20-week moving average, which is sitting at about 130, 160. And then from there, can it reject that level? Just looking at this stock again, where that stochastic is at, I would suspect a rejection, another rejection. If we have that rejection on that 20-week moving average, paired with where the stochastic RSI level is at, we could be seeing this get back to that 150 range. All right, and then looking at the MACD, if we look at the MACD, buying pressure, blue line, cross underneath the selling pressure, which is normal sell indicator. So that's one thing just to pay attention to. You want to wait until you can confirm that this is about to, the blue line, my buying pressure is about to cross over my red line, or it has crossed over my red line, my selling pressure. That's the last thing that I would be waiting for. So ultimately, looking at this, I'm waiting for it to establish its bottom. Can it say that? I'm waiting for it to either establish its bottom as 130, 131, or if it breaks above 140 range, then you can say, okay, that's a good time to get into a trade and you can trade it up to 150. If not, if it doesn't break this 140, I will be waiting for it to show me exactly where it's going to bottom out at. So I'll be waiting for it to come back to 130. If it can test that 130 range, at that point, I'm looking for a rejection. If it rejects 130, then that's a good indicator that, okay, this could be the bottom, and then you can trade this to the upside. And then with that, if it tests 130 and rejects, I'm not going to play it all the way to 150 first. I'm going to break this trade up into multiple sections. So what I would do is once it rejects, I would have my 140 as my target price. So I will get into the trade, and when I see the price hits 140, I'll go ahead and or get really close to 140, I'll go ahead and get out of that trade and then wait for it to break above and hold above 140. Once it breaks and holds above 140, you can get into another trade and then trade it up to that 150 range. And then this is on the weekly, so that may take a few weeks for it to happen. Like this week, we may see some pullback. And if we do see pullback, 130. If not, if we don't see pullback, then we could be seeing this get to 150. And then we'll take a look at the daily as well to see how it's going to be trading potentially this week. Any questions so far? All right. See, Asia did thumbs up. Perfect. So let's check out the daily. See what's happening there. All right. So the daily, you can see price on the daily. Maybe I looked at it wrong, but price is above our resistance level that we had at 140. It is above there. This could potentially make it to the 150 range on the day this week. You may not, if you're looking to trade this and you want to be bullish on it, I wouldn't, if you're going to do target prices, I wouldn't necessarily make my target price 150. And that's just because of where that stochastic on the daily is at. While it has room to the upside, and we know that sometimes it likes to stay above there for a little while. Like if we zoom out, we can see that it can stay above that 100 range for a couple of days, maybe a few weeks, but ultimately it does need to cool down. So we could see this get back to 150. But if I was you, I would, and you're going to get into a trade, I would probably make my target price like 145, 147 as my target price, just so that I can secure profits and wait for a pullback to happen. Because a pullback does need to happen, but it looks like it'll probably come and test about 145, 147 before it starts to pull back on this week. And that's what I'm seeing. And again, so for this stock, the 50-day moving average, which is this orange line we have here, that's going to be my support level. So as you can see here, it's right above the stock. So that's going to be my support level. So this 140 range that we talked about, that resistance is a strong resistance level. So with that, strong support level. So with that, if it rejects that support, then we can start to see it increase as well. But I would just be, if you're looking to trade this to the upside, I would be having 45 to 47 as my target price. Any questions? All right, perfect. And if you're looking to be like, okay, I want to, what about if it continues to go down? So if it goes down this week, I'm waiting for it to break beneath the support of 140. If it can break beneath the support of 140, then I will feel comfortable getting into a play to the downside, and then I will make my target price wherever this 100-day moving average is at. So currently the 100-day moving average is at about 130, 138. So it'll probably be around 132, 133 when it starts to pull back. So that's where I would probably have my target price for if it's going to pull back and you want to do some put options. I would be looking at about 133 as my strike price. And again, I wouldn't get into that play until after I can confirm that it breaks beneath this resistance that we have and it holds down there. Once it holds, then you can feel more comfortable getting into that put option and trading into the downside. Any questions? Perfect. Okay. Let's start off with the weekly, then we'll switch back to the daily. Okay. So Robinhood has been running up. We can see here on the weekly, RSI level is high, stochastic is high. So for a long-term trade, and you're looking to hold this out, is this a good point? I would be careful. I wouldn't necessarily get into a play because that RSI level is really high. It's sitting at 77, and we know eventually it needs to cool down. It needs to come back. Now, I'm not saying it's going to come all the way back down to 30, but we'll probably more than likely at least see this get back down to about 50. We've seen in the past here that it tested 50 before it started to turn around. and then pair that with where the stochastic RSI level is at. I know that this stock does need to cool down. So I would just be waiting, especially for long-term plays. With that being said, if we was to draw some support and resistance, we can say current price is going to be support or resistance, excuse me, sitting at about $40. You can draw it even higher if you wanted to and say it's about 42. But we'll just call it, we'll just say 40 is where it's testing. And if it breaks above that 40, we could be seeing this get to 42. So that's my two levels of resistance. Now, if it was to reject this area of resistance, where is it going to go? The first place is going to come and try to test. We can draw it really, I'm drawing it just really close. We can say right here where we have this activity at, we can say this is a nice strong level of resistance sitting here at about 30, $37.50, $38 is going to be the first level of support. Now, if it breaks beneath that, then we can just call our support here at about 33 because we called it here previously, and that was the level. And it's probably going to come into, it's probably going to come and try to test about $33. And looking at this stock again, long term, I will wait to maybe find a better entry point because you can probably find this for a discounted price. It is at $39, $40 now, but I'm thinking this does need to cool down before it starts to trend back upwards. Just looking at the indicators, and we're really, while we have separation on the MACD, the more that this stock price consolidates and pulls back, we're going to see that buying pressure, that blue line start to point downwards, and we know that it's going to try to then we know that we're going to then see this stock price decrease once we have that crossover to the downside. Do I have any questions so far about the weekly chart of Robinhood? Okay. So let's check out the daily, see what can happen this week. All right, perfect. So, all right, so looking at this week, looking at the daily, we have where the stochastic is in that oversold region, it's starting to try to point back upwards. So that's a good bullish indicator. And we also have where the RSI level is at. RSI level is sitting at about 60.35, a little bit outside of that sweet spot. It is pointing upwards, and we know it does potentially have room to continue to go up. And then we're really close to a MACD crossover to the upside as well, where that buying pressure is getting closer and closer to crossing over that red line. So looking at this, what I'm thinking is what's going to happen is if this was to continue to trend up, we're going to see this potentially get back to this $41, $42 range this week. Now, can it break above this level is what I'm looking for. If we get to this $41 range, and we start to see that we're closer to a crossover to the upside on that MACD, then we could be seeing Robinhood make it to about $45 as the next target price. And I'm just pairing that in with, again, if it breaks above this level, that stochastic is also going to probably be at about 50. And at that point, that's a good little place to go ahead and get into a trade. So if you're looking to be bullish on this, I would be waiting. I mean, you can play it to this 42 range and get out, but I would be waiting for it to break above 42. If it can break above 42 and hold above 42, then I will feel more confident saying, okay, this stock price is probably going to get to somewhere at about $45. And that's just, again, that's going to be all-time highs for this stock. So that's why I chose 45 as my next level of my next target price, $4 to $5, or $5 to $10 increments. So above 40, 45 is $5 above 40. So that's why I would be saying this can get to this week if it was to trend upwards. Now, if it was to reject, the place that is probably, if it was to reject, it's going to be coming and trying to, if it was to reject this level, pull backwards, the place that is going to first come and try to pull back to is going to be this 37 range. After that, if it breaks beneath that, and we could be seeing this get to about $34.50, which is going to be this 50-day moving average. That's the next place that it could potentially get to if it was to break beneath this 37 range. So what I'm just looking for here is, can we have a rejection at 37? If we could, then it could be trending upwards, or can we have a breakthrough above 40, this 41, 42 range? If we can have a breakthrough above this, we'll probably be seeing 45. And that's just looking at these indicators. Any questions? All right, perfect. I got 2 thumbs up. Abby and Asia, thank you. No problem, Abby. Thank you for the hand clap. I appreciate it. All right, let's see what else we have. MO. All right, so now, so new stock, haven't never charted it before, so we're gonna go ahead and draw some support and resistance lines because this stock price is currently testing the 20-week moving average. The next place that it can break below, I'm gonna say it's gonna be right here at about $49 to $50. And why did I choose this level? I chose this level because of this activity right here that we have, the stock price. Before it broke above it, we can see it traded on this line before breaking above it. Even when it pulled back down, it came to this level and tested that level before rejecting it and pulling up. Also at this level, this was the 20-week moving average. So I know that when it comes back to try to test this level, it's going to treat it as a strong level of resistance or support, excuse me. So that's why I drew this as my first level of support. And now for resistance, we're going to draw resistance. The first level of resistance is going to be here at about $54.34. So you can call it 54 would be the first level of resistance. Current price is 52.55. So if it trends up, we know we're going to have some type of activity to where it's going to try to reject this level. And if it rejects this level and pulls back down, we could be seeing this get back ultimately down to 50. But before it gets back down to 50, it's going to come and test this 20-week moving average. Current 20-week moving average right now is sitting at about $53.10. So if it rejects this level, we could be seeing it try to test 53.10 before breaking beneath that. Now, if it was to break above this level of resistance, the next place is going to come and try to test. It's sitting here at about $56.50, $57. And these are just references, so support and resistance lines are just references for you so that you can find a good place to go ahead and get in, right? So it's not going to be perfect. It may not reject that 56 for the 50, but it may reject that 57, but it's relatively close to it. So you just want to use these as reference levels to say, okay, this is where it tested previously, so this could be a place where it can test again. But that's going to be my next level of resistance. Looking at this stock, we have the RSI level is pointing downwards. It's inside the sweet spot, but it is pointing downwards. And we have that stochastic also pointing downwards. It's basically in that oversold region. So I would just be waiting at this point because we know that with the stochastic, it can stay underneath that level before it starts to trend back upwards. But I would just be waiting for it to reject. And once I have to where my stochastic is pointing upwards and my RSI level is also pointing upwards inside that sweet spot, that could be a good place to go ahead and start getting in. I would be a little bit careful. The reason why I wouldn't just get in right now is because pair this downtrend we have in with this MACD crossover that we just recently had, we could potentially see this get back to that 50 range before turning around, just because I know we have downward momentum. One thing that I do like about this is that we're starting to see the moving averages get back into chronological order where we'll have the 20, 100, 20, 50, 100, 200 all in order. So once this 100-day moving average gets above this 200-day moving average, that makes the 20-week moving average a really strong line to break above. So we can see here already that when the stock price broke down, when it tested this 20-week moving average, it rejected it. So I'm thinking that we're probably going to see something of the same nature here, where the stock price is testing this 20-week moving average. So once we see that we have that rejection, and we could be seeing this again, try to get back to 56, potentially even higher than that. But we're just waiting for those rejections to happen. And we're waiting for that rejection to happen, and we're also waiting for these indicators to start pointing upwards the way that we would like. So we want that stochastic RSI pointing upwards, maybe inside the blue zone, and then we also want that RSI level pointing upwards. and at least have the MACD to where the blue line may be underneath the red line, but it is pointing upwards as well. So we can see all those pointing upwards, and that could be a good place to go ahead and get in at this point. And then that's on the weekly. So that may take a few weeks for it to start to point upwards in the direction we would like it to be pointing. Any questions so far? Let me check the chat. And the last set of stocks. Okay, so you're talking about Ross's stocks. Okay, perfect. All right, Ladarius, that's cool. All right. So let's check out the daily. Where's the top? Yeah, let's have a good time. Okay, so now looking at the daily for this stock, looking at it, I'm saying, okay, it's setting up for me to potentially see this stock price get back to this 56 range. The next place, the one place that I want to see it break first is I want to see what happens when it tests these moving averages that we have cluttered together, the 20-week and the 100-week moving average. Once we can, if we can break above those, I will feel more comfortable saying, okay, I can get into a trade and I can easily make it back to this 56 range. And why am I saying that? I'm just looking at where the RSI level is at. It's pointing upwards. It's inside. It's a little bit outside of that sweet spot of 45, 55. But once the stock breaks above this level of 54, we should see that RSI level inside the sweet spot pointing upwards. We're really close to the stochastic. The stochastic is also pointing upwards and it's trying to get back to that 100 range. And then also we have a MACD crossover that's potentially about to happen. It's getting closer and closer to where my blue line is going to cross above my red line. And we know that anytime we see that, that causes the stock price to increase in value. You can see here, blue line crossed above the red line, stock price starts to go up. So, and when it crosses underneath it, we can see the stock price decreasing, blue line is underneath it, it's decreasing. So once we have this crossover to the upside, that's going to be another good indication to say, okay, I can get into this stock price and I should easily be able to make it back to that 56 range that we have here as support. And at that time, again, the stock price will have been broken above these two moving averages. And I'm not getting into this trade right now, right? I'm not going to jump ahead of the game because we could see the stock price maybe get to 54 and then reject. So I want to wait until the stock price breaks above these two moving averages and can close above it. If it can break and close above these moving averages, then I would feel more comfortable getting into that trade and trading it up to 56. At that point, for me, I would go ahead and get in and set my alerts so that it can sell out once it hit my target. Any questions so far? Okay, perfect. Great. And then with that, again, because of the way that this is setting up on a daily, we go back to the weekly, because we have that rejection that's potentially happening on our 20 week moving average, we're probably going to see that rejection happen and we're going to see it get back to 54. And then if it breaks above 54, we could be seeing this get back to that 56. So yeah, that's definitely what's going to happen. So if it rejects this, if it trends up this week, we're going to have that rejection on the weekly of our 20-week moving average, which should catapult us up to that 56 for sure. I mean, potentially even higher. It could continue to increase as well. But the stop that it should definitely make is going to be 56. All right. So we got another one. Let's go to the weekly chart. So let's go ahead and draw some support and resistance. So if we look at the RSI level, it's pointing downwards. It is inside the sweet spot, but it is pointing downwards. We can see this level to where it's at. Previously, it's been treated as basically the bottom to where it tests this level and it rejects and trend up. We have one here and we have one here as well. So this could be the place where we can say, okay, this stock at least RSI level wise, it's about to start to point back upwards. So with that, if that RSI level is pointing upwards, we know that the stock price is going to be increasing. Stochastic RSI level is pretty low. It's at 0, and this is on the weekly. It is at 0, so we know that anytime it hits 0, ultimately it's going to try to make it back to 100. You can see here it tested 0, took a little while, but ultimately it got back to 100. Back here, tested 0, got to 100, and vice versa. So looking at support and resistance level wise, for support, we're testing a strong level of support currently right now. We have 2 moving averages that is testing. So we can just say that our support, we'll just draw it basically right here. We can say that this is going to be our level of support. So about $57, we can just call it 57 even. Is going to be support. Trying to make it a little. Oops. Hope I won't call it 57. That's pretty. Yeah, we can call it 57 even because that's going to be this underneath this 50-day moving average and this 200-week moving average. So we can call this our level of support. So if this stock price was to trend down, it's going to come and try to test this level and reject from here. Now, if it was to break beneath this level, then we could be seeing it come down to about $56.25, $56 is where it could be coming to test. And why did I choose this level? Well, it's close to that moving average that we have, which is going to be it's kind of hard for me to see. That's going to be my 100-week moving average that we have. And then also, if we look back, we see price was decreasing, tested this level, rejected it, went up, came back down, tested this level again, rejected it, went up. Ultimately, it broke beneath it, but then it shot back above it. And even when it broke above it, we can see it started from that level. And even back here, we can see it's getting relatively close to this 57 range. So that's going to be my next level of strong support. Now, for resistance, first place I'm going to say is going to come and try to test. And I'm keeping it really tight, but the first level is going to be here at about $58.50. So that's going to be my first level of support. After that, we can say that that 20-week moving average could be support, but ultimately, if it breaks above that, we're going to be seeing this come and test about 60. So I have it at 59.63, or you can call it 60. It's going to be that level of resistance, that it could ultimately test. So if we was to see this stock price break above our resistance at 58.56, we're going to be seeing this get to about $60 in price. And then let's check out the daily. Okay, perfect. So daily chart is showing us that ultimately this could be making a double bottom. And if you don't know what a double bottom is, it's a charting pattern. I can draw how it would look. So a double bottom basically is when the stock price is going down, testing support, goes up to a certain level, breaks back down to that support level we have, and then ultimately it starts to increase back up to where it originally started at. So we could be seeing this get to potentially, get back to about $60 in price. Before that happens, I wouldn't just get into this trade now because you want to wait. With this pattern, this double bottom pattern, you want to wait until it breaks above this area, which is called the neckline area. So we can draw support. We can just drag support up. So we want to see it break above this support level. And that's also known for the double bottom as the neckline area. So once it breaks above this level and can hold, then you can go ahead and start getting into your trade, and you can potentially trade it up back up to 60. Now, I wouldn't, if you're going to do option plays, I wouldn't necessarily make my strike price 60. I will pull it back a little bit. I would probably make it this 59.50 range is going to be a nice little place that I can say, okay, it should definitely get here. So I would make it 59.50 as my strike price, or 59 if you can. If you can't do 59.50, do 59. And with that, if it breaks above this level, you can still just stay in the trade until it actually hits 60. But if not, and it's having a hard time breaking above this level, you can go ahead and take profit from that point. But you'll already be in the money if you do the $59 range. And just looking at the indicators, RSI level is low, pointing upwards. It's getting close to that sweet spot. We have the stochastic RSI is flirting with this 50, the neutral range, and it's trying to break above it. So If we can have that break above that level, we should be seeing this get back to 100. And then with that, if this actually starts to complete this pattern, that MACD is going to, the buying pressure is going to get closer and closer to crossing above that selling pressure that's going to cause the stock to increase. Any questions? Okay, perfect. Speed. And more. To ETF for the video. This one.
I do have a question.
Uh-huh.
Are your recommendations for swing trading or for long term? Because for JEPI and even the stock NVDY, it's like, I guess it swings off of NVIDIA. My goal now is like quarterly to buy in bulk and try to build dividends.
Yeah. Yeah.
So, yes.
Yeah. So
I wasn't sure. Sorry.
all right, go ahead. Go ahead.
No, I wasn't sure which, if this is for swing trading or just in general.
Yeah, it's just in general, but what I can do is I can definitely tailor-made it for long term. So if you're looking for long term for these, anytime you do a long term, I always tell people, don't, if you're gonna invest, let's just say, I'm just gonna throw a small number, $100, don't put the whole $100 in to begin with. Just put like $20 in. Just keep 80 on hand and then just buy dips, right? So anytime you see the stock price dip, just go ahead and buy more shares of it, because ultimately you're looking to hold this long term. You're not looking for a quick turnout for this, right? You're holding it long term, so you can buy dips, and that buying those dips will help you average down your average cost. So it'll help average down your costs. And pair that with these stocks. Both of these stocks pay dividends, and it looks like they pay them on a monthly basis, if I'm not mistaken. December, January. Yeah, they pay them on a monthly basis. So pair that with that. You can just go ahead and buy a little bit. And then anytime you see these dips like this dip that we're having, this is a good opportunity to go ahead and buy more shares. Buy more shares. And then those dividend payouts, you can always have those reinvested in as well into the company. So you're just still, anytime you get those dividend payouts, just have it reinvest back into the company.
Okay.
Did that answer your question?
Yes, thank you.
No problem. All right. And let's look at video. All right. So looking at this one for the long term, I'm not sure why this is. So we bring it all the way back together. He does this every time. And so I'm streaming this onto a streaming service as well, so it's definitely slowing my computer down. Computer is really, the hamster is running and it's tired. Really is. Okay. So with this one, just looking on the weekly, looking where that stochastic RSI level is at RSI level, and if we was to draw support, I would say that this would be a good time to go ahead and start to get into a position if you're not in one. But if you are in one, this is a good place to go ahead and start to add shares. Once you see this rejection, that's a definitely indication to go ahead and get in. So, but again, that's just looking at it for a long-term play. This is the bottom of the stock. The stochastic is really low. RSI level is pointing down. If you wanted to be a little bit more conservative, you can wait for it to start to, you can wait for a group 1 or 2 green candles before you actually get into it. But ultimately, this is going to be a good spot to get in, looking at the weekly. And then with that, once you have that rejection, that's going to start to point this MACD as well to the upside. And then you can go ahead and get in. And then let's check out the daily. And then so for the daily is showing me for this week. And maybe it's not the best time to get in, because looking at where that stochastic is at, I know that it needs to come down. So we could, if you're looking for long term, we could say, okay, well, for this week, it may not be the best time to go ahead and buy for this stock, because if this was to continue to decrease, instead of getting it at $23.35, we could be finding places where we can buy in at $22.80 or $22 even if you draw it a little bit lower. But we could be finding better positions to go ahead and average down that cost. So for this week, I would say just watch it. If it does pull back, we could be seeing this. Look to see what happens once it gets back to this level at about 22.50. Once it gets back to that level, if it rejects, then that could be the place to say, okay, now this is probably going to be the bottom. I'm about to start to see this increase from there. But yeah, that's what I'm seeing. And again, they pay dividends this every month. So if you are in this, and this is $1.18 per share that they're paying, so that's pretty good dividend rate. So with that, if you're in there, you can just turn on that reinvest in. You can just reinvest this money back into the company, and anytime you're doing that, excuse me, the drip. And anytime you're doing that, it's just going to add more shares, which means that when you're doing that, it's adding more shares, and each dividend payout moving forward will increase in value as well, because you're adding more shares to it. So you're just creating that snowball effect. Any questions? No problem. Okay, perfect. All right. So I see we're a little bit scrapped for time. I've been talking for about 30 minutes. So I'm going to pass it off to Darren so that he can cover his stocks. And then if we have time, we can go over the other ones as well. I think Darren said he's going to cover a few of those as well within his stock picks. I appreciate y'all.
Cool. I appreciate that. Mark, let me see. We do have a few. We got VRT, GE, VALB, Kava, and Rocket Lab. All right, so Rocket Lab is already on my list. What I'll do is I'm going to go through my list, and then if we can get to the other four, VRT, GEV, ALAB, and Kava, we'll get those knocked out. If not, we'll have to push it to the end because for the sake of time, we can't go through all of them. It's good that you all posted them, but we're just knocking them out first come, first serve. So in that case, I'll start with Rocket Lab. And
but there's 1 second where you go into that. Also, I see that the last two that you posted, Abby, were crypto. If we don't get to those, we also have a crypto session every Thursday run by Sean, and I'm pretty sure he's probably going to go over Shiba and the Bitcoin Cash. So if you just ask him in that Thursday session, you can definitely get information from him. He's great at crypto, and it's every Thursday at 8 or at 7.
Yep, good point. Appreciate that, Mark. Again, another reason to join the Discord. We have a lot to offer at a fair price. But yeah, again, if you're interested in joining, we'll talk about that at the end. All right, let's get into some charts. Where are we? Screen 2? Yeah. All right. Rocket Lab. So Rocket Lab, I've been watching this one for a while. I actually traded Rocket Lab when we traded some options when it bounced off of the 20. Let me turn on my other moving averages. There we go. So Rocket Lab was, again, this is why you want your moving averages stacked, 20, 50, 100, 200. They were stacked. And we had bouncing off of that 20 MA. So it rejected this high point up here around 28, came down. And then we actually played, I want to say, what was that? The last trading day was that Friday. I hopped in a Rocket Lab. I want to say it's a $30 call. Expiring January 24th, I want to say. But we saw that it was ranging around. So this is a bull flag. If you don't know what a bull flag is as far as patterns, simply put, it's just a strong move up and then it makes a flag. So if you zone it, you can see the flag waving out to the right. And then this is the flag pole. So this long move up is the flag pole, and then it's creating a flag. And this flag where are we at? How much is on this flag? We can go here. So that's about a 20% flag. So nice zone that is bouncing around, meaning if you set your support and resistance nice and you're just buying shares, you could buy on the floor, sell on the ceiling, and you can get 20%. So if you're going in with $1,000, easy $200 move up to the ceiling, take profit, keep it moving. Get rid of that. But it was zoning and it actually broke. So 15% jump in one day from Rocket Lab is great. I actually think that it has more in the tank. And what I said in the Discord is that this year we're going to be trading more stocks that are under $100. So $100 and under is kind of what I want to trade more, because I mean, we can trade the $600, $500 stocks, but when it comes into options, when it comes into accumulating 100 shares, which allows you to do covered calls and, you know, have more flexibility of making money, it's kind of hard doing it with, you know, if getting 100 shares of a stock that's $600, everyone can't do it, right? So this, now we're focusing on cheaper stocks that are giving us greater gains. So 15% pop. Again, we were watching it. I had just got into this after I got out of I think I had a SPY put that was turning around on me. I had a stop loss set at like 20%. Hopped into this went right back up. I think it closed at like 30% for me. So Rocket Lab, we're looking at it on the day. Has some space. Again, it's just breaking out of that resistance, which is what we want. So it's making highs. I think Rocket Lab could be $40. Also, we got the RSI at 64, kind of high, but this stock just made a high move. So I think the next step here is that we actually may pull back intraday. And what I mean by intraday for my new people is like midday. During the day, we could pull back. We might get another tap on 27. So if it goes back down to 27, that's another opportunity to get in the entry because this is a giant candle. We got to give some of that back before we move back to the upside. So it broke. I think we're going to get a retest coming back down, and then we're going to rock it back up, right? So right now, RSI is high at 64. Not too high. You can see that this RSI has been as high as like 86, 87 on the day. And then if we look at that MACD is saying that even though we've been moving, you know, we've been chopping, we're still in a confirmed downtrend, but we're on our way up. And again, we get this MACD crossover. We're already at pretty much $30. Like I said, Rocket Lab could easily be a $40 stock. I really think it's going to 40 this year. And it could go to 40 within the next, month, 2 months. So I'm keeping my eye on this one. Right now, I've been trading options. If you like to trade shares, you can do that as well. Again, a 15% spike in one day is great. Again, if we're thinking in thousands, you put 1,000 in, you just made 150 in one day. Nice move. And then we look at that stochastics. Already, it's only at 28. So again, once this decides to go, we could see an over revving on the RSI again, because a lot of energy built down here, a lot of energy pent up for moving back to the upside. So now this is what we got on the day. Let's go to the 4 hour. So look at the 4 hour, and what a coincidence, 64 on the RSI. So it's kind of high. Still got some room to go up to 70. We just got that MACD crossover, right? Again, I told you, when you get that MACD crossover, it gives you that punch, right? So that MACD crossover, again, we spiked for 15% in one day. We had that MACD crossover in the 4 hour. It gave us the punch that you get. Again, to start the trend, we were in a downtrend, getting close to switching over to a uptrend. Soon as these two wires touched, boom, we had an explosion to the upside, right? So explosion to the upside, you can see it here with these green candles. Let me zoom in. You can see it here, these two green candles. Again, it may come back down into the 27s, but that's just a good opportunity to either grab some shares or to set yourself up for an option. And if you want to go long, you can do that as well. Again, I do like the $40 point. If $40 is too much for my option people, you could aim at 45, 50. If you want to be a little adventurous. But if we look at it again, does it have space? That's the stochastic is still telling me, hey, we just entered a confirmed uptrend on the 4 hour, and we're only at 52. We still got some gas in the tank. So the 4 hour and the 1 day, they're in agreement, which is what I like to see. And again, this has been channeling for a while, so it's about time that it breaks the high. With these stocks that are moving hot, what you're going to notice if you go to that week, you're going to see a crazy RSI on the week, but it is okay. This is a stock that is in trend. So stocks that are in trend, they're going to have high RSIs on the week and high RSIs on the month. So the way that you trade these lower price stocks, these stocks that are under $100, is that you want to kind of focus on the day, the 4 hour, and you may want to drop down to that 1 hour. That 1 hour is kind of your lower entry point. You can see that this is why I'm saying that we may get a pullback, because if we go all the way down to the 1 hour, our momentum is slowed for right now, right? It's already at 100. That number is 100. Again, if we get a pullback, we give this a chance to reset, so then we can move back to the upside. Like I said, this should be pulling back at some point down to 27, maybe 26, a nice point for an entry, and then we can just take it back to the upside. So again, with these high flyers, don't worry about the week. I know the week could be high, but you want to watch the 1 hour, 4 hour, 1 day. And again, if you're in the Discord, I'm kind of holding your hand. You can get baby five by me a little bit because I'm already trading stock. So you can follow along with me. All right. That is Rocket Lab. Sound, another high flyer. Now this one, this is more of an AI play. Again, we do have CES this week, which is going to be big for AI. We do have NVIDIA CEO speaking this week. So I'm expecting to see some movement in the AI space. And Sound could be one of those to go back to test its resistance. So it has support right here. Boom, it has support right here. You can see it's just kind of ranging for a while. Again, same setup, bull flag, strong uptrend, ranging between this area, and then it's going back up to test. So it looks like we could get another test at $4, which would give us, what are we doing? So we'll do 1970. So that's about a $21 move if you would have caught it at the bottom. So that means you could get what, 10 to 12% move if you're buying shares. If you're doing options, you could probably see even more depending on where you buy. But I like Sound to go to test that 24 range again. I think that we could break it. The RSI is pointing down because it just came off of a bounce on the ground. Again, if you get used to that VRVP, you can see it bounced around this range for the VRVP. It could be moving higher. And then the MACD is crossed to the downside, but we're getting some softening here. We're getting some pink, some softening that we could, that shows us that we could be moving to the upside. And this stochastic is not at 20 yet, but 1965 is really close. And again, I think that CES should push AI stocks, including this one, into more of a buy zone. So 2065 for Sound is good. Where do I think Sound is going? I think Sound could go easily for $30, especially if it breaks that 24 range. And when I'm giving you these price points, I'm not saying for the entire year. I'm saying this is the localized price point that I think it can reach for where it's at now. I like to be realistic. I don't want to, I mean, Sound could go for $80 this year, but I don't want to get it. I don't want to lie to anyone or get anyone hopes up. I want to be realistic with you. And I think that, again, 30 is a point that that we can reach. And once we get to 30, we can reassess. Let's look at it on the day. We look at it on the day. It has pulled back. It finally cooled off. You can see that the RSI was hot at 82 and 83 before pulling back. So it pulled all the way back to 59. Now it's pointing up at 61. And then you can also see it was getting close to testing that 20 MA. So if this decides to turn around on us, let's say worst case scenario, it goes backwards, right? It pulls down. I don't see it getting any lower than this 19 to 1880 range because we have support from the moving average. And again, we can bounce off that moving average back up. But even before the moving average got there, we've been stuck in this channel for a while. So I think it's time for us to go for another test topside and to see if we can break it. Also, when we go there, the MACD is crossed to the downside, but it's not crossed to the downside too much. And we just came off a crazy uptrend. This is a crazy buy trend. We crossed back here, in November, and we didn't cross again until December. So this is a month of just running for 30 days pretty much. And now the stochastics at the bottom at 3. Again, once it crosses that 20, it should have some momentum to take us up to 50, and then 80, and then 100. So really nice setup on sound. I like where it's at. I like the fact that it's channeling, and I like the fact that it's getting close to that 20-day MA to take us back to another for another test topside at 24. So nice setup, and this is one that is on my watch list. All righty, keep it moving for the sake of time. Next one, AI. So this one popped 6%. So again, all of these, again, I think this year is going to go to the cheaper stocks. Last year, you had NVIDIA going for 170, 180, 190%. Is NVIDIA going to do that again this year? No. NVIDIA is not doubling and tripling in price this year. That will put NVIDIA is already at 3 point something trillion. NVIDIA is not going for 6 to 9 trillion. It's not doubling and tripling again, but we can find nice sizable gains in the same sector, but just with cheaper stocks. The reason being is people like to buy cheaper stocks. It's just that simple. Does it really matter? Kind of not, but the size of the company and the price of the stock allows people to just buy more, and then you get to see nicer gains. So still think AI is hot, but we just need to find better plays than NVIDIA. NVIDIA is still going to move up. Don't get me wrong, in my opinion, but can we get higher percentages? Yes, we can. And again, that's what we want. So looking at AI, 4 hour, it just confirmed our uptrend right here, a little peep. Again, nice print for the day. We got a 51 on the RSI. It is climbing. So on the 4 hour, its moving averages have crossed. So what we need, anytime you get a moving average crossover like this, which normally is bad, what you need to reverse this is you need the candles to get above this moving average. So you need the candles to be above that 50 MA. If we can break above 37, then we can go ahead and test this resistance. So in this range, we have our localized ceiling. If we can break through that ceiling, then there's a lot of buys for us up here. A lot of buys. You can look at the VRVP and see way more blue than it is yellow. Like even if we look at our data window, again, this is where we're paying attention to. If I hover over these nodes, look at that, 1.7 million to 500 million. So you got almost 2 million buys with 500,000 sales. And then you go here, 1.5 to 700,000. Here you got 1.3. So a lot of buys up above, but this is the testing ground. We need to get above this 38, 39 range. If we can, then we can run it back up to about 44, 45 and make new highs. So AI looks nice. We look at the day, we can see that again, similar story. Still needs, the VRVP is telling us, hey, there's a wall right here. We need to break that. So if we can break that, we can continue to move higher and then potentially get those higher highs. And right now, when we go up against that, we have enough momentum. We're all the way at the bottom at 9. We can take it all the way up to 100. So we got enough energy built up. It's just what's going to happen once we get up to that point. So this is where I'm watching. That's why I have it on my watch list, because I need to know what happens once we get to this point. Are we going to break? Are we going to reject? And so I'm going to watch this one. I'm going to set my alerts, and I'm going to be ready to alert the Discord on if I'm going to buy shares, if I'm going to buy options, so on and so forth. So it is AI. Next one, OKLO. So this one, look at that, 24% in one day. We actually had someone, I'm not going to say their name, I don't know how they feel about it, but we had someone that was kind of nervous about this trade. We've been hunting this one down for a minute. We were watching it. It's been channeling. Look at all of that channeling, and then exploded off the top of those moving averages and took off. So 24% in one day. They only held this stock, I want to say, for like maybe a week, maybe like 6 or 7 days, and they made $900 off the trade. So $900 in 7 days, nice trade to me. And it popped for 24%. So again, this year we want to focus on good stocks in good sectors, but we want the cheaper stocks because people can buy more and we can see nicer gains. So easy move up. This is another one I think is going to 40. It's been channeling for a while, and it has some space. right now is hot. So I do think that after a nice sizable candle like that, we should get a quick pullback. We can get a retest back down to about 25, 26 before moving higher. So this is one that I've been watching for a while. Again, if we go through any of my charts, like Mark said, and there's a whole bunch of lines on it, that means that I either traded it or I've been watching it for a while. So this is one of those. Nice 24% pop on Friday. So again, 64 or 65 on the RSI. MACD is crossed over to the upside, of course, and then that stochastics is saying, hey, we are 61 out of 100. Again, this is what you want for the reset. You want it to hit 100, pull back, give you more of a chance to get in so that momentum can reset, and then you can move back higher. Honestly, I think this momentum indicator could pull back some more. I think 45 to 50 is probably where I'll feel comfortable, and then it can move again to the upside. So watching this one for sure. I don't think it has another 24% day in it right now. If it does, we're gonna have some happy people in the Discord because they're on this one. But I think that with this one, again, another $40 stock, great sector. The sector is getting a lot of attention. A lot of deals are being made in the sector, and this is one that I would definitely say watch for the year. Any questions? Cool. All righty. All right. Bigger stocks. I'm going to forego the last one. I'll post that one in the Discord. Bigger stocks. All right. Meta. Meta is a stock that we looked at the beginning of the session, but I think that Meta is Meta is making a double bottom, W-shaped pattern. Came down, went up, came down, went up. So Meta right now is at 604. I'm thinking that Meta is going for 625 to 630 again for a retest, and we can possibly break out of that range. Again, this is why I keep repeating patterns. Nice bull flag, strong move up, chop, 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 pop back up to the upside. Let's see if we can break higher. So Meta could easily be 725 to 750 this year. With all the things that they have. I don't think the run is done. I don't have it here, but I'll also watch Google. I think Google is going to be a sneaky one this year, based on the moves that they've been making, looking at their earnings, looking at their balance sheets, and looking at their chart. So watch Google. But Meta, nice setup. 53 on the RSI pointing up, is going to retake that 20 MA. MACD is getting ready for a crossover. Again, when those two wires touch, we get an explosion. And then the stochastics is at 24 and climbing. So really nice swing trade setup. Again, if you want to get more into trading and you want it to be slower, you don't have to trade options. You can swing trade. Just make sure your trades set up. So that's kind of my challenge for everybody. It's just to hit on more of your trades. I don't care how much you make on the trade, but it's how many trades can you hit on, right? Like last week, I think I set up 5 trades and I missed out on 1 out of 5 trades. So I want more accuracy. And then once you get accurate, let's say you set up 10 trades, you hit on 7 out of 10 or 8 out of 10. Great. Now you can start to speed up your trades and move into other things. But if you can't set up a swing trade and hit on more than half, in my opinion, you set up 10 trades, you should be able to hit on 5. You can't hit more than 5, then I think that stay with swing trades until you get it. And again, a win is just green. So you exit at 5%, 10%, 20%, that is a win. Don't exit on a loss, right? But again, Meta is looking nice. It's going to test that resistance that we have set at about 625, and I think that we could break it. Last stock is the SPY. One of my favorite stocks. Again, this is the one that I was day trading last week. Just killing it. A lot of volume in here. Look at that. A lot of volume. So expect some chop on the SPY. We could see some bouncing around, and I'm thinking that if we pull back, we could pull back here. It was making a head and shoulders, so I was playing puts. For the people that know what a head and shoulders is, it is a bearish pattern, meaning that the stock was going down. That's how I made all of that money last week with day trading, is because I traded it down on the first day. The first day of the market, everyone thinks it's going to go up. I've been trading for years, and I know that that's not the case. So I played it down, and it looks like now it is starting to recover. So I got my eye on the SPY because I want to see what happens once it gets up to about 596, 597, and to see if it can break. Because if it can't, it's going to reject and come right back down to about 580 to 585 range. That gives us the opportunity to play it back to the upside. So we're not out of the woods with this head and shoulders just yet. But if we can reclaim and break through that, if we can reclaim the 600 and we break that 597 to 596 range, that means we can go back up, test highs at 605, and potentially see 610. And again, if we look at all of the other indicators, 48 on the RSI pointing up, MACD is starting to soften, right? We got some light red, and then that stochastics is at 23 pointing up, right? So it's in that 20 range. We could take it up to 50, 80, 100. So nice load up is making, but again, I know how the market works, and again, we have a wall of volume to break through, and it looks like right now it's kind of neck and neck, and you might have a little bit more selling than you have buying. These yellow bars look a little bit bigger than the blue ones, but that could change. So that's why I have this one on my watch list. Don't know if I'm going to make any trades off of this one. Again, I am still watching those cheaper stocks, but for my people that like to trade options and day trade, I recommend watching the SPY and watching Meta. All right. Any questions? All right, cool. So we spent a large portion of the session just covering stocks, which I'm pretty sure you all appreciated that more. So due to the sake of time, we only got 3 minutes until 8. We're going to forego the pattern of the week. If you are in the Discord, we do have a whole section that's dedicated to patterns that Mark, he's made, I don't know, 15, 20 different presentations. You can go through the presentations, and if you have any questions, you can let us know. Yeah, again, patterns are very helpful. We just did not have time today. Again, just covering all of you all stocks and trying to get this information in, especially this being the first stock session of the year. So with that being said, I'm going to stop sharing my screen. I'm going to stop the recording. And again, we do have 2 versions of the Discord for those that are interested in seeing the Discord to see if you want to join or not. We have a paid version and a free version. Again, the paid version gives you access to option trades, watch lists, all of our personalized things. The free version of the Discord, you still have access to some of those channels, but it's more of the basic dialogue channels. We still post some things in there, like, you know, what we're looking at for the day, but more of the trades that we're setting up as far as like me day trading, option trades, things like that, they're going to be on the paid version. And again, it is $50 a month today. And actually, I should be live trading at some point this week, which when I live trade, that's available for everybody. So if you ever see me, if you're in the Discord and you ever see me in the voice channel and I'm sharing my screen, you can hop in regardless of what plan you're on. But yeah, so with that being said, let me stop the YouTube. Let me stop the recording first.